Yo people, welcome to what is the actual very first video on this channel. I feel like this is quite a momentous occasion. So as it is the first video, I'm just going to take a minute at the start and go through the background of why I'm actually making this channel in the first place. Now, if you don't care about that, I'm totally not offended. You can skip straight into content using the timestamps at the bottom. As for the actual topic of the video, I thought starting with some basics of personal finance seemed pretty apt and pretty relevant for the first video. So I'll start from the start. For most of my life, I didn't take too much notice of personal finance at all. It wasn't until 2014 that I became self-employed, and I had to at least learn some of the basics just to be able to fill out my self-assessment tax return and things like that. Then it was 2019 that I started really taking an active interest in personal finance, because that's when I started looking to buy a house. And usually to buy a house, unless you are very wealthy, you need a mortgage, right? And so you have to consider things like your credit score, how much savings you've got, current interest rates, and all that kind of stuff. So I wanted to do some reading so that I actually understood what I was getting into, right? What the mortgage advisor meant when he was using all of this terminology that I'd never heard before, right? So I started reading some books, watching some videos online, and just taking an active interest in all things personal finance or related to the financial world, right? One thing that struck me as I was learning was, why did nobody teach me this stuff in school, right? Because you learn a lot of stuff in school, some useful stuff. I'm not going to say none of it's useful, but like, I think you're in school for a lot of time, and it would be nice if, you know, you were at least imparted with some practical knowledge that would, you know, stand you in good stead for the rest of your life, right? It's kind of worrying to me, the average level of general knowledge around personal finance or basic economics and that kind of thing that the typical person on the street would have if you just stopped them, started questioning them about stuff, right? What does this mean? What does that mean? Most people wouldn't really have a clue. And the reason why that is worrying is because it leads to a lot of people making pretty poor financial decisions. And so really, I'm making this channel because I'm interested in it, and because I hope that we can have some good conversations. Maybe other people are interested in this kind of stuff, and then eventually maybe we can help educate some people and help people to make better financial decisions. Now, there are quite a few personal finance channels on YouTube, some really good ones. However, a lot of them are pretty North America or US centric. So they talk about stuff like a Roth IRA, a 401k, these weird things called dollars, right? There are some ones that are based in the UK, some good ones too, but I'm making one as well. So here we are, let's do it, let's dive into the video. I wanted to start with some real core basics so that if somebody comes across this video knowing absolutely nothing about personal finance, they could leave with at least a basic understanding that would stand them in good stead in the future. So if you were an alien and I had to teach you about the absolute fundamentals of personal finance within about 10 minutes, this is what I would tell you. First up, responsible budgeting. So everything else in this video is more about learning information, whereas this is more about learning good habits and behaviors. I know the word budget isn't particularly sexy, but I couldn't really leave it out, because if I had to choose one thing that was going to give the most people the most help, it would probably be this. So the average Brit doesn't have particularly good spending or saving habits. 1 in 10 Brits has no savings at all. 41% of us don't have enough savings to make it through a month without earnings. Now, I can understand not having much savings because not everyone earns enough such that they have much left over at the end of the month, but no savings at all is like fairly worrying, because most people, if they wanted to, they could put a couple of quid, a fiver, a tenner a week away if they really wanted to. However, most people don't want to, or at least not as much as they want to go to Selfridges and buy some new trainers or something like that, right? And in today's on-demand, instant gratification culture, it's easier and easier to spend money that you don't have, right? You don't even need to get a credit card or a loan anymore, because with services like Klarna, where you can buy now, pay later, they will instantly just let you spread your payments out over however many weeks or months you need to. So you're just encouraged to buy things immediately. Now, there are some typical recommendations for how you should divide your income. However, they will obviously change depending on your income level, because just because you earn less money doesn't necessarily mean that a loaf of bread costs you less, right? In fact, it doesn't. And so the essentials are more likely to take up a larger proportion of your income. Now, one of the most common recommendations is the 50-30-20 rule, where a maximum of 50% of your post-tax income is used on essentials like rent, utilities, food, not fancy restaurants and stuff, food that you actually need to eat. 30% is discretionary spending. So it's all the things you just want. It's your wants, right? It's Netflix, it's fancy restaurants, it's like clothes that aren't essential, that kind of thing. And then the remaining 20% goes towards savings in whatever form they take. Now, maybe you feel more comfortable if you can get down your necessary expenses to below 50% in order to save more than 20%, or maybe you feel like saving 20% seems like quite a lot and it's kind of somewhat out of reach. Of course, what's possible and what's preferable will be different for different people depending on your income levels and your general preferences, right? If you can afford to save more than 20% of your income, then ideal, you know, congratulations, go for it. But if you feel like 20% is somewhat out of reach, then at least it's something for you to aim for and work towards and try and get closer to. Now, the median UK wage for 2020 was around about £31,000. Now that means that after tax you would take home around £2,000 a month. So if we use the 50-30-20 rule on that, then it means £1,000 of that would go towards your rent or mortgage payments, gas and electric, that kind of thing, all your essentials. Then 30%, so 600 of it would be your discretionary spending, any clothes you want to buy, any restaurants, any cinema trips, all that kind of stuff, your Netflix subscription. And then the remaining 20%, so £400 of it would go into your savings. So that's just an example for the median UK wage. So the next key thing to understand is how interest works. Now, interest is the cost of borrowing money. That means when you borrow money from somebody, you pay them interest, and when you lend money to somebody, you earn interest. When the news talks about the current interest rates, what they're usually referring to is the bank rate, sometimes called base rate. Now, that is the interest rate set by the Bank of England, and that is what they charge commercial banks who borrow money from them. So if a commercial bank can borrow money from the Bank of England at a low interest rate, it usually means that you can borrow money, whether it's through a loan or a mortgage or whatever else, from these commercial banks also at a fairly low interest rate. So typically low interest rates are used to encourage consumer spending, because obviously if the cost of borrowing money is less, then you are more likely to go and spend some. Firstly, you need to know how to avoid being a victim of interest and how to use it to your advantage. That involves trying to avoid paying it wherever you possibly can, or only paying it at very low rates, and or when you feel like you can get more value from the money you've borrowed than the cost of borrowing it. So for example, you might have a great business idea, but you don't have the capital to start that business. You might go to the bank, get a loan, and it might cost you 10% of the value of the loan. However, you might feel like you could probably make 30% profit on that money, and so you would repay the loan, repay the interest charge on it, and you would keep the 20%. This is sometimes described as leveraging, where people borrow money to invest in assets and they assume that the profits from investing in those assets will outweigh the cost of borrowing. Obviously, that's somewhat risky, because if it's not, then you owe someone loads of money. But you know, that's a conversation for another day. Now, where you can use interest to your advantage is if you invest in assets that give you a consistent return over time. So you used to be able to walk into a high street bank, open a savings account, and you would get a decent rate of interest with that account. Due to the current low base rates, that is no longer possible, and so people are looking for alternatives such as the low risk, low cost stock market investments that are index funds. I will go into those in another video, but to summarize, let's say you're making 7% interest on your investments, right? First year you make 7% on the initial amount. The next year you make 7% on the initial amount plus the 7%. So year by year you're making 7% on a bigger and bigger amount. You're making interest on your interest, and this is called compound interest. It's very powerful and it deserves its own video, which I will come to in time. Now, just as a final warning, I could talk forever about all the different kinds of interest and what's necessary and what's unnecessary, but let me just give you one warning. Credit card interest can get absolutely terrible if you miss your payments, or if you only even pay off your minimum payment every month. You can literally be paying off a credit card for 20 years. And if you do the calculations, like, please do the calculations and work out how much you're actually spending on interest and how long it will take you to pay off. And it will, well, it should probably change your priorities if you do have credit card debt. So this is the big red flag there. All right, let's talk about inflation. So inflation is the gradual decrease in value of a currency, or you could call it the decrease in purchasing power. You might think that a fiver is always going to be a fiver, right? But if a chomp used to be 10 pence and now it's 25 pence, then what you can buy with that £5, or the purchasing power of it, has decreased. So it could be house prices, groceries, utilities, general consumer goods, right? In general, they are all getting more expensive over time. Now, why is this important? Well, it's important because if you take £1,000 and stick it under your mattress for 5 years, you might think that's a safe way to do things, right? But if when you pull it out in 2025, you find that you can't actually purchase as much with it, then the value of that 1,000 has decreased. And so even though nobody has literally snuck into your house and stolen some of your money, the actual end result is the same. And that is pretty scary and something that you definitely need to guard against. Now, the government tries to keep inflation at 2% per year, and at the end of every year, they will tell you what it actually was for that year. However, the way they measure that is certainly questionable. There are some sneaky, dodgy methods going on, and that is probably a whole topic for another video. But in general, it is safe to assume that the actual real inflation level is higher than whatever the government announces. So if they say it's 2%, the chances are it's probably higher. Now, ultimately, this means that you need to make sure that your money or assets are increasing in value by at least 2% per year, or at least in line with whatever the current level of inflation is. So if inflation is at 2%, but you have all your money in a savings account with a high street bank that is giving you 1% interest per year, then even though the actual figure in that bank account is going up, the value of it overall is going down by 1%. Now, there are ways and means that you can do this, but again, that is a topic that I will elaborate on in a future video. Okay, last but certainly not least, tax. So knowing the ins and outs, or at least having a basic grasp on any tax laws that might affect you, is absolutely essential. Now, if you're employed and you're just on PAYE, then you can probably get away with not knowing too much about income tax. However, if you're self-employed or you run a business, then you certainly do need to know about income tax. You probably need to know about corporation tax, VAT, anything that might affect your business, at least until you can afford to pay an accountant. And that would be my advice. As soon as you can afford to pay an accountant, I would recommend doing so. At least for me, that was something that I wish I'd done earlier, and the money that I spend on accounting fees is really some of the money that I begrudge least out of anything I spend in my whole life, right? It makes your life a lot easier. It's certainly worth it, right? Now, aside from income tax and that kind of thing, there are other taxes that might affect you at some point in your life. So inheritance tax, stamp duty, capital gains tax, all these kind of things at some point are likely to have some impact, right? So I would certainly recommend familiarizing yourself with the basics, because if you are caught off guard, then it might sting a bit, right? So those are what I would consider the basic fundamentals. That's it for the first video. I tried to condense what is a huge topic down into something that was, you know, at least somewhat digestible. So I hope you enjoyed it, found it somewhat useful. Obviously, subscribe to my channel, and I will hit all these topics plus more in more depth in the future. See you later.